Okay, fellow traders, it is Wednesday. We are doing Tuesday's market review into Wednesday using ICT breakers on the 5-minute chart. And as always, first things first, make sure your chart is set to New York or anything I explain and try to teach you will not understand and will not be able to execute. Secondly, what you want to do is you want to highlight 12 o'clock midnight for the beginning of the day's trading, and you want to highlight 7 a.m. Once you have that highlighted, on your left hand side of 7 a.m. is going to be the London session. Once you have your London session highlighted, highlight the low of the London session, draw it out into the future, and you want to highlight the high of the London session. Once you have that, or the reason why you want to do that, because at these price points, and if you're doing it every day continuously, at these price points, that's where breakers form. London session high, London session low, New York session high, New York session low, previous day high, previous day low. At these price points is where the big trades form for obviously a scalper or a day trader. This is a day trader slash scalping strategy. Sometimes these moves pan out so quick and I'm done by like 9:30. Sometimes the move takes the whole day, so yeah, it's the market. Moving on, once you've highlighted your lows and your highs, you want to highlight any breakers or fair value gaps that stand out. And when you're doing this here, obviously you're not going to get it right immediately at like your first time. So what I usually do is, just going a bit on the side mission here, I'll highlight everything like this here. So every time I get a breaker, for example, this is just a way to teach you how to do it, just to get you started. So I'd highlight that, I'd draw it out to the future like so. I'd do that, I'd put something there, I'd put something there. And what so what that does, it helps you that, let's say for example that we swiped the London session high, and then price does what? Price breaks above and then comes back and touches that recent high. That for me confirms my signal, my strategy. It lets me know that, you know what, I have a short position that I can go in. Where can I go in? There's no fair value gap. I've explained this before. If there's no fair value gap, you look if there's another type of order block candle within that movement. There was there, the entry point was there. Price made a higher high, we traded down. Price made a higher high, we traded down. What are you aiming for? You are aiming for, obviously, the low. You'd be aiming for that. But what if we don't make it to the low? How else do you know to exit a trade? Your fair value gaps, you draw them out. So if I had this here, for example, and price got here and I saw that nothing happened, there was no effect, what does that mean? It's not looking for that. Then I'd move it a little bit lower to this one, and then I see, as it got here, what did it do? Did it form another breaker? No. Low, high, low. We didn't break that market structure, so there was no change. Then I'll move it lower and lower until what happens? Until price bounces, makes a high, makes a low, trades above that. Then I know there's been a change in the state of delivery. So I've just given you a huge nugget. A huge nugget. This is how I understand price action. This is what this is like my strength when it comes to reading price. I understand that price is going to use breakers and fair value gaps to swing high and swing low. So rewatch this, slow it down, write it down. I've just given you a huge nugget. Moving forward, the first move of the day is always the 8:30 move. I've said this before. This is the quick move that happens, but it's also part due to swing. It's not really the move of the day. So never try and get into that move. For example, here we have a low, high, lower low, breaking market structure highlighted. What are you aiming for? So during CPI, there was a huge candle that was left going down to the downside. And if you understand, oh no, not a huge candle, a huge wick. It left a huge wick and then it formed a candle. So that was a bearish order block. And if you know anything about ICT strategies and these concepts, you always measure half the wick, because price action is gonna price action is going to treat the wick like a fair value gap. So you measure half of the wick and you aim for that. So knowing that, exactly right there, I took my TP. The wick's end is the yellow line on the top. The wick starts right here. From here to here is that long wick, but that's on the left hand side. That's for you to go check out and hold me to it. Moving on, price reaches that point. So obviously there's, okay, you know what, for my ANSI people, okay, there's a little move there, and then we break down. The break is right there, right there. So that's after the 8:30 Judas swing move, and then you start looking for your first entry. I've said this before, around 9:30 to 10:30 is when you're going to find that move. You enter, you go short, aim for what? You always aim for a nice easy target. What is going to be an easy target to aim for? Right here, low hanging fruit. This fair value gap here, which acted as support sometime. Cool. And then if price keeps going down, I explained this before. That's how you also know your target points, ladies and gentlemen. So everything that works for you to read price can work for you to also know when to take profits moving forward. So that was the only trade of the day. Like, for me personally, I don't like to scalp too much unless like price is moving, like, for example, boom boom, and it does that. Then it does this. Then I'll scalp, because why? That's a huge range, but this is not a huge range. Price, was trying to make it out or whatever was happening, but then this was your first entry. If you had missed this entry here, and I've said this before, when price creates another breaker within a breaker where you've just entered, when it comes back again, that's how you add your next move. That's how you add to your winning positions. That's how it's done. So right at that fair value gap right there, you could have entered again, and depending where you were taking your profits, even if it was right there. Cool. So now we came there, we went up again. So you could have aimed for this low here. That's another way of doing it. But as I've said before, if you're in front of the charts or you are watching, when is price gonna reach a certain price point where we should anticipate some type of reversal or a bullish breaker? In this case here, at a bullish breaker, if it bounces and creates a bullish breaker going up, that means it's retracing. That means it's time for you to stop that move and wait. Sit on the sidelines.